Take two. Hey everybody, it is Thursday the 31st, end of the quarter, and this is the second time recording this. Unfortunately, I had it on mute, so let me just clear this off. And let's talk about where we are in this market. We're still down about 5% year to date in the S&P 500, and we got back above this prior resistance level, but that was short-lived as we came crashing down through it here today. On the 15-minute time frame, we are now below the the rising 5-day moving average. That means the light just turned from green to yellow. If it turns red, here's the scenario I think is likely to occur. We'll be looking for maybe a bounce tomorrow. We had end of quarter pressure here. That's what this big volume was, just end of quarter stuff. So it's likely that we see a bounce. And if it gets trapped below the 5-day moving average and that 5-day moving average starts to turn lower, it seems to me as though you could likely short it here for a move down at least towards the 48 level. And if, not there, then 44, where we see the volume weighted average price from the recent low. And when we look at the daily time frame, we can see that here's where we were 50 days ago. So that means tomorrow, as we get rid of this data, if we're above that date, above this closing price right here, that means that that 50-day moving average will begin to rise ever so slightly. And as we get rid of this data next Monday, Tuesday, Wednesday, Thursday, and Friday, as long as we maintain above, basically this line, then that 50-day moving average will start to turn higher. That's somewhat important to institutions. It's not a buy signal, but what we'll also see is that 20-day moving average will start to come up through it. And then if this market continues lower down into this level, what we'll see is we will be met with not only the 20 and 50-day moving average, but the year-to-date volume weighted average price and the volume weighted average price off of these recent lows. So the one from this low will be coming up at this rate, and we might undercut it. But from this low, we might see that volume weighted average price come together right in this level. That will be a critical area for this market to test. If it starts to bounce from there, that's a good, near-term thing that we'd want to see on a shorter-term time frame, such as a 15-minute time frame. Let's just do this. What we would want to see is that if it starts to fail like that, then it comes down and maybe, does something like this in the next couple of days, down into that 44-ish, 444, 440-ish. Well, we would look at it to do something like this. We'd put a volume-weighted average price off of this level right here, and that volume-weighted average price would begin to do something like this. And the 5-day moving average would look like this. And what we would want to see is that if the market, maybe came down Monday, Tuesday, Wednesday of next week, and then did something along that lines, well, then the 5-day moving average would be rising once again. We would be above this confluence of important indicators over here, and then we could possibly sustain some further upside. Now, the flip side of that is if we come down to this level and we get a bit of a bounce, and then that bounce fails at the volume weighted average price off of this peak, and it gets trapped back under a 5-day moving average, and then we begin to decline, then we could be in for a much deeper sell-off that, based on the weekly chart, looks like it is pretty reasonable to expect. And again, you can't ignore the headlines, but they're not a reason to trade. But there's things to be aware of, such as a war going on, the Federal Reserve, inflation, etc. So we're at a critical level that we're pulling back to an area that has the potential to be a key turning point for this market. Right now, I would say, be cautious going into tomorrow and then the first couple of days of next week. If we see it pull down into this level, how it acts in this area is going to be indicative of probably the next month or so for the market. Same story for the NASDAQ. I kind of sketched the same thing in earlier. I had already recorded this, but unfortunately had my microphone muted, so I'm doing it twice. But we've got the volume weighted average price off of this low right in here. That will come in and meet not only the pink year-to-date volume weighted average price, but last year's volume weighted average price from January of last year. And of course, that 50-day moving average will begin to rise as we get rid of this data over here all next week. That's the data we're replacing with new data next week. As long as we're above this blue line, that 50-day moving average will be rising, and we'll see the same thing. The 20-day moving average will come up, and if it finds buyers in there, then there might be continued upside. But if instead it gets a bounce, that bounce fails, we get a failed move in here, then I think it could be a crushing decline. The Russell 2000, you look at the weekly chart and you can't ignore that this was a giant level of prior support, and support broken tends to act as resistance. What else do we have up here? Well, we have the volume weighted average price off of that peak, better seen on the daily time frame with that red there, that we came up to on Tuesday and Wednesday of this week, and today we backed pretty far away from it. So same story. We've got this prior big band of support. There's a lot of people trapped with losses in here. Support tends to act as resistance because it gets back up to that level. People look to say, hey, I want to get out, break even. Short say, hey, it's back in that area. Let's start adding pressure to those longs and see if we can force them out and crush this market. So, the scenario here is maybe it comes down to this, again, the conjunction of the 20-day moving average, the 50-day moving average, the year-to-date VWAP, and gets a little bit of a bounce from there, but then starts to decline. That could be, pretty crushing, that we would probably test the COVID low and 38.2% retracement again. And then, thinking 2 or 3 steps ahead, it might lead to something like this. That's too far in advance to really, anticipate. Right now, we have to take it piece by piece and say, perhaps we get a bounce, and if so, how does the market handle it from there? Same story in the semiconductors. We've got the volume weighted average price from the low that will come together with that 50-day moving average. The 50-day moving average, will be getting rid of this data tomorrow, and then on Monday, Tuesday, and Wednesday of next week, if we are above there, this 50-day moving average will begin to flatten out and rise. We've got the 20-day moving average rising up. We've got the volume weighted average price from this low. So we have the possibility that maybe it does something like this, or we get a little bit of a bounce, that bounce fails, and then it's lights out. We just don't know. If you know, you're smarter than me, you've got a crystal ball, but I don't think that is the case, that anyone knows what's going to happen next. We have to prepare for all scenarios. The biotechs continue to trade really kind of, just poorly, basically. Maybe they're building a base in here, but, I certainly don't want to chase them after going from 118 to 134. It's just too many mixed signals in there. Financial stocks, if they come down to the 20-day moving average and volume weighted average price from this low, maybe they make a lower high, and then fall down. But, this is just too much volatility for me. I don't see an edge in this market unless you're trading it on shorter term time frames. And if you just clear everything off here, look at the 5-day moving average and why that is so important. So now if we come up to that 5-day moving average, get trapped underneath it, I think you have to have a bearish stance in the intermediate term. The energy names just kind of absorbing some of their recent gains. Oil was lower, and these stocks continue to hold up, but it seems like they're in need of a rest here.